Can ancient wisdom solve today's challenges? Absolutely. The cyclical nature of Yi-Jing aligns perfectly with today's economic cycles. By understanding these patterns, businesses can better anticipate changes, allowing them to pivot effectively when challenges arise. Why hasn't this channel discussed the Federal Reserve's easing policies until recently? The ancient Chinese system of Yi-Jing guides our analysis. The Yi-Jing, or Book of Changes, uses hexagrams to offer insights. Recently, the hexagrams have shifted, suggesting the Fed is preparing to lower interest rates. This change is significant, indicating a shift in economic tides. Are you prepared to see uncertainty as a positive force? Stay tuned as we delve deeper into this fascinating development.
How does Huoyushui Weiji highlight the balance between risk and reward? Welcome to our channel, where we bridge the wisdom of the ancients with cutting-edge financial insights. Today we'll explore a fascinating interplay between traditional knowledge and modern markets, from Federal Reserve policies and geopolitical risks to the booming AI sector led by Nvidia. We'll also uncover how shifts in oil and Forex markets signal both challenges and opportunities in the global economic landscape. Stay tuned as we break down these complex topics into actionable insights you can apply today. What can we expect from the upcoming economic data? The core PCE, the Fed's preferred inflation gauge, is expected to show a mild 0.2% increase for last month. While rate cuts are on the horizon, the timing and extent remain uncertain, with the markets preparing for the usual seasonal slowdown. The Federal Reserve's every move is watched closely by the markets. The recent change in Yi-Jing hexagrams has heightened this scrutiny. Investors are eager to understand what the Fed's next move will be. The Fed's decision will have a ripple effect across the global economy. Investors are watching closely for any clues as to what the Fed will do next.
Can appearances be deceptive in business? Absolutely. The hexagram teaches that what looks promising on the surface may hide significant dangers beneath. Leaders must look beyond initial allure to uncover underlying risks, a principle vital when negotiating or investing. How does this hexagram influence financial strategy? Capital flow in today's economy is similar to the circulating energies in Yi-Jing. Money moves, yet its perceived value remains dependent on context. Just as the traveler's one tale solved no real problems, shallow financial strategies might only appear successful without addressing deeper issues. Is movement always progress? Not necessarily. The Huoyushui Weiji hexagram demonstrates that movement without alignment leads nowhere. Just like capital that circulates without generating real growth, companies can spin their wheels, mistaking activity for achievement. The financial world is holding its breath, bracing for the Federal Reserve's next move on interest rates. Jerome Powell has already laid out the game plan. Rate cuts are on the horizon. The only real question is when the curtain will rise on this easing cycle. This week, all eyes will be on the US and European inflation data releases. The script seems to be written, at least for the next act.
Why is Nvidia's upcoming earnings report so significant? Nvidia's stock has seen astronomical growth, up 170% in the past year and 3,000% over 5 years. As the leader in AI chip production, Nvidia's performance is seen as a bellwether for the AI industry and broader tech sector. While the Federal Reserve holds court on the economic stage, another drama is unfolding in the tech arena. Nvidia, the undisputed champion of the AI chip market, is set to deliver its earnings report. Their stock has been on a meteoric rise, soaring over 170% in the past year alone. But amid the euphoria, a note of caution lingers. Will the Fed's rate cuts be enough to sustain these lofty heights? These are the questions that will be answered in the coming weeks. Why is it dangerous to trust outward appearances? Just like the fox is deceived by the appearance of shallow water, businesses can be misled by attractive but unsound opportunities. The lesson is clear: dig deeper or risk suffering hidden losses.
What factors are currently influencing oil prices? The oil market is a powder keg, and the Middle East is the match that could ignite it. Tensions in the region have been simmering for months, and each flare-up sends shockwaves through the global energy market. Last week saw a dramatic plunge in oil prices, only to be followed by an equally swift rebound. The reason for this volatility: the ever-changing geopolitical landscape. The recent events in the Middle East, with Israel launching strikes on Hamas and Hezbollah leaders, have once again injected a dose of uncertainty into the oil market. The oil market is caught between a rock and a hard place. OPEC+, the cartel of oil-producing nations, is trying to manage supply to keep prices elevated. On the other hand, global demand is showing signs of softening. Buckle up, because it's going to be a bumpy ride. In particular, its 64th hexagram, Yi-Jing, symbolizing before completion, speaks volumes about both strategic foresight and the complexities of navigating uncertain environments. The tale of a fox trying to cross a river during a drought, only to wet its tail and risk disaster, is a fitting metaphor for the intricacies of market dynamics and capital flow. How might current geopolitical events impact the global economy? The global stage is never short of drama, and right now, all eyes are on the Middle East. The recent assassinations of Hamas and Hezbollah leaders have thrown the region into a state of heightened tension. The big question on everyone's mind: will Iran retaliate? And if so, how? Adding another layer of complexity to the geopolitical landscape is the upcoming US presidential election in November. The coming months will require a steady hand and a keen eye on geopolitical developments. How do fire and water reflect the tension between ambition and caution? The imagery of fire and water in this hexagram represents conflicting forces. In business, ambition may push us forward, while risk requires us to be grounded. Yi-Jing emphasizes that when these forces are out of sync, progress stalls. Managers who grasp this duality are better equipped to navigate incomplete tasks and complex market environments.
What opportunities are emerging in ASEAN markets? ASEAN's time to shine, a new dawn in global finance. The ASEAN region, a bloc of 10 Southeast Asian nations, is attracting increasing attention from investors seeking growth and diversification. A weaker US dollar is a boon for emerging markets, like those in ASEAN. ASEAN's economic stars are aligning, with a young and growing population and a dynamic entrepreneurial spirit. Investors looking for the next growth story would be wise to turn their attention to this dynamic region.
Nvidia's earnings, a tech thriller, unfolds. The financial world is holding its breath, and it's not just because of the Federal Reserve's upcoming decisions. Nvidia's journey has been nothing short of phenomenal, with a staggering 170% surge in the past year alone. However, even in the midst of this tech euphoria, a note of caution lingers in the air. Will the Fed's anticipated rate cuts be the wind beneath Nvidia's wings, propelling it to even greater heights?
The balancing act, demand, supply, and OPEC+'s dilemma. The oil market, a volatile beast at the best of times, is currently caught in a precarious balancing act, pulled in opposite directions by the forces of supply and demand. OPEC Plus is currently grappling with a dilemma. Should they maintain their production cuts to support prices, or should they increase output to meet any potential shortfalls? Cutting production too aggressively could send prices soaring, potentially harming global economic growth. Tensions in the Middle East, particularly the recent flare-up between Israel and Iran-backed groups, have the potential to disrupt oil supplies, sending shockwaves through the global energy market.
As the US dollar, the world's reserve currency, experiences bouts of volatility, investors are increasingly turning their attention to new horizons, seeking growth and diversification opportunities beyond traditional markets. Among the most promising contenders is the ASEAN region, a bloc of 10 Southeast Asian nations poised for dynamic growth. The weakening US dollar is proving to be a boon for emerging markets, like those in ASEAN. ASEAN's appeal extends far beyond a favorable currency exchange rate, with a compelling growth story and ambitious economic reforms. The rise of ASEAN highlights the shifting balance of economic power and the emergence of new centers of growth in the 21st century.
The Middle East, a region synonymous with volatility, has once again lived up to its reputation. As the weekend fades and a new trading week begins, oil markets are grappling with the latest geopolitical shockwaves. Israel launched strikes, reigniting fears of a wider regional conflict. Oil traders have been anxiously watching for any spark that could ignite a full-blown conflagration. Tensions alternately push oil prices higher, then recede, allowing cooler heads to prevail, temporarily. With each flare-up, the stakes rise. Will this be the event that tips the scales to all-out war? The oil market, a barometer of geopolitical risk, reacts quickly to developments. Prices surged as news of the Israeli strikes broke, reflecting heightened anxiety. Initial price spikes driven by fear can be fleeting. The real question is whether this latest escalation will have legs or fade into background noise. While geopolitical tensions in the Middle East continue to cast a long shadow over the oil market, a more fundamental shift is underway in the world's second-largest economy. China's insatiable thirst for oil, the engine of global demand growth for years, is showing signs of waning. This seismic shift, driven by China's aggressive push towards electric vehicles, or EVs, has profound implications for the future of oil demand. Last week's oil price action provides a glimpse into this evolving landscape. After a steep midweek tumble, oil prices staged a solid short-covering rally, fueled in part by a weaker US dollar. A weaker dollar tends to boost oil prices, as it makes dollar-denominated crude more affordable for buyers using other currencies. However, this reprieve may be short-lived, as the oil market grapples with the implications of China's EV revolution. China's love affair with EVs is no passing fad. Driven by a combination of government incentives, concerns about air pollution, and a desire to reduce reliance on foreign oil, EV sales in China have skyrocketed in recent years. In fact, EVs now account for over 50% of new car sales in China, a staggering statistic that underscores the speed and scale of this transformation. This rapid adoption of EVs is starting to have a noticeable impact on China's oil demand. For the third consecutive month, China's oil demand shrank in June, and preliminary trade data for July suggests that this trend is continuing. This slowdown is raising alarm bells among oil market analysts, who are now questioning whether China might hit peak oil demand much sooner than previously anticipated. The Organization of the Petroleum Exporting Countries, or OPEC, and its allies, known collectively as OPEC+, find themselves at a crossroads. The cartel faces a delicate balancing act as it navigates a rapidly evolving demand landscape. Global demand is softening due to China's slowing economy and the rise of electric vehicles. The International Energy Agency forecasts modest demand growth, a downgrade from previous projections. OPEC+ must also keep its oil-reliant members content. Cutting production too much could hurt these economies. But maintaining cuts too long risks a supply shortage as demand recovers. This balancing act keeps the market on edge. OPEC+ has opted for a cautious approach, gradually easing production cuts. The cartel's next move remains uncertain. Uncertainty breeds volatility in the oil market. Geopolitical risks add to the complexity. Recent conflicts and tensions inject fresh uncertainty into the market. OPEC Plus faces a challenging environment as it seeks stability.
As the global economy navigates a period of heightened uncertainty, marked by trade tensions, slowing growth, and geopolitical risks, one region stands out as a beacon of opportunity: the Association of Southeast Asian Nations, ASEAN. Comprising 10 dynamic economies: Brunei, Cambodia, Indonesia, Laos, Malaysia, Myanmar, the Philippines, Singapore, Thailand, and Vietnam. ASEAN is home to a young and growing population, a burgeoning middle class, and a vibrant entrepreneurial spirit. These factors, combined with supportive government policies and a strategic location at the heart of Asia's growth engine, have made ASEAN one of the world's fastest-growing regions. While ASEAN is not immune to global economic headwinds, its diversified economies, strong fundamentals, and commitment to regional integration provide a buffer against external shocks. Moreover, the region is benefiting from several tailwinds, including the ongoing trade diversion caused by the US-China trade war, which is redirecting investment and manufacturing activity to Southeast Asia. Investors are taking notice of ASEAN's potential. Foreign direct investment into the region has been on an upward trajectory in recent years, attracted by its growth prospects, competitive labor costs, and improving infrastructure. Moreover, ASEAN is increasingly seen as a key player in the global economy, as evidenced by its growing trade and investment ties with major economies such as China, Japan, and the European Union. As the global economic landscape continues to evolve, ASEAN is well positioned to capitalize on the opportunities and navigate the challenges that lie ahead. Its combination of strong fundamentals, favorable demographics, and proactive policymaking make it a compelling investment destination for those seeking growth and diversification in a world of uncertainty.
As we've journeyed through the complexities of the global financial landscape, from the Federal Reserve's delicate balancing act to the oil market's geopolitical tightrope walk, one recurring theme emerges: the need for wisdom, adaptability, and a keen eye on the horizon. In a world of rapid change and interconnected risks, the old playbooks no longer suffice. We've seen how the ancient wisdom of the Yi-Jing, with its emphasis on balance and the ebb and flow of change, can provide valuable insights into modern financial markets. Just as the I-Ching's hexagrams shift and evolve, so too must our investment strategies adapt to the ever-changing dynamics of the global economy. The integration of ancient wisdom with modern financial analysis is not merely a novelty, it's a necessity. By embracing the principles of balance, adaptability, and a long-term perspective, we can navigate the complexities of the financial markets with greater clarity and purpose. The global economy is not a zero-sum game. As the US Federal Reserve gradually loosens its grip on global monetary policy, new opportunities emerge in regions like Southeast Asia, where ASEAN's dynamic economies are poised for growth. The key is to stay informed, stay nimble, and never stop learning. The future of finance is not preordained. It's being written every day by the decisions we make, the risks we take, and the opportunities we seize. By embracing wisdom, adaptability, and a commitment to lifelong learning, we can navigate this ever-changing landscape with confidence and purpose. Remember, knowledge is not merely a tool to enhance your value, it's a formidable power to shape your destiny. If you found these insights valuable, make sure to subscribe and click the notification bell so you never miss our updates. Leave a comment below on what topic you'd like us to cover next. Your input helps us tailor content that matters most to you. And don't forget to like and share this video to support the channel. Let's stay informed and grow together in this ever-changing financial landscape.